Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Gold is up around $41 currently at the moment, or 2.18%. It was higher on the day. It's currently trading at $1,909. I thought I'd take a technical look at gold because we got a comment on our Twitter feed from a trader saying, I just shorted gold again on this pump. Basically, shorted the same amount that I had covered previously. So what do we know about that comment? The comment says that the trader had bought gold and now is selling gold after being shorted, I guess, prior. So he bought lower. He's the price is now higher. Now he's looking to sell gold. Does that make sense from a technical perspective? That's what I'm going to focus on in this video. Now, I don't know the details of the trade from the trader, but when I look at the weekly chart of gold and I look at this low price from last week, the low price from last week came right down to test this green line. This green line represents the 200-week moving average. Maybe the trader bought against that 200-week moving average last week. If it did, it was a smart trade. Why? Because risk can be limited, defined and limited against that 200-week moving average. If you buy against a 200-week moving average, where's your stop? Below the 200-week moving average. And in this case, the price came right down to that 200-week moving average and moved higher. Now, in trading last week, the high price came in right against the 100-week moving average. So traders who would have bought against this level right here would certainly want to see the price move above the 100-week moving average this week. That would give them more confidence of a further move to the upside. It would at least turn the technical bias back to the upside, and the risk would have been a move back below the 100-week moving average. Sound simple? It is. That's what technicals do. Now, let's take a look at the daily chart to see about his short, because if you look at this weekly chart, there really isn't anything to sell against at the current levels, is there? You'd probably have to see the price maybe move up toward the 1959 level, or maybe even these high prices that we saw in trading earlier, not there, but up here, right around there, that level right there, around 1946, to where that would make sense from a technical perspective. So, but if you look at the daily chart, you get a different view of the technicals. This is a view that other traders will be looking at as well. And when we look at this chart, what do we see? Well, this green line represents the 200-day moving average. This blue line represents the 100-day moving average. And as you can see in trading here today, at session highs, the high price today reached $1,919.13. It got within $3 of the 100-day moving average at $1,922.72. $3 to $4. Above that is the 200-day moving average at $1,929.37. So traders who are looking to sell gold, like the Twitter guy, may have leaned against those two moving averages, selling against those moving averages in hopes that it stays below that level. They're leaning against it. That gives them the opportunity to define risk and limit risk against those moving averages. As long as the price remains below those two lines right there, the bias from a technical perspective remains more negative. Note here that the last two times that the price tested the blue line right here and here, we did get a little bit above it here, but not much. And right here, we found sellers against it. So sellers here, sellers here. That's what traders who are leaning against those moving averages are hoping, that the price goes up to them and finds sellers against them. If the price were to go above them, maybe they would get out of that trade. Let's say it goes up above the 200-day moving average right here, and this would be their stop. So what you're saying is, I'm going to risk this amount, or the difference between here and here, as the risk amount, in the hopes that I make more than that on the move back to the downside. So is gold a good sell right here for this trader? I think so. If you're leaning against the 100 and 200-day moving average, if the price moves above those moving averages, all bets are off. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.